commodities household name in Houston in the industry, but of course, Chevron CEO Mike Wirth, thank you so much for joining us.
You're welcome. It's nice to be here, and yeah, I'm a Houstonian now, so it's nice.
2
to be.
years,
It's
right?
nice to be home. I'm in my 2 years.
We'll get to the politics of California at some point, but but now looking at where California is, does it seem kind of crazy that you were even headquartered there at one point?
Well, I don't think, in the beginning, it made a lot of sense. I mean, we made the first commercial discovery in California in Pico Canyon in 1879. And we built, our first refinery there in Northern California. Second refinery was built, the refinery is called El Segundo. It was the second refinery. There's now a city that's named after our refinery. So the state grew up around us more than us going to the state, and so we were part of the state's history. And for an awful long time, California was a big producer. It was one of the biggest producers in the world at one point, and we were an integral part of the economic story in California. Things have evolved, obviously, but it made sense for a long time. It doesn't make sense today.
Okay, so we're going to start with more so the news of the day and what's going on in Washington. I know you've been keeping up with the headlines for the president. Secretary Wright said 7 million barrels a day are getting out of the Strait of Hormuz, which would be a pretty big deal. How do you view the market dynamics right now? What actually is coming out of the Gulf?
Yeah, our view would be it's probably not quite that much. There are ships that have been transiting out, typically with transponders off, typically at night, and with some support from the U.S. military, and that has helped ease fundamentals in physical markets, and so we've seen price action that has been a little bit, I think, different than people expected. But what has been true through it all, and we can talk about it a little bit more if you'd like, is the market's been pretty incredible in terms of how it's adjusted, both on the supply and the demand side, to buy time and kind of address the risks that exist.
What is the driving force behind that? Because most people thought we'd be higher than $150 a barrel.
Yeah. Well, early on, you saw, the paper markets trade on expectations and narratives. And early on, there was a lot of fear that prices were going to go that high. So you saw paper markets really take off. Physical markets followed. And then things have reversed. As the narrative has been, we're closer to the end than the beginning. There's a peace deal that's just around the corner. And physical markets obviously have had to deal with the realities of supply constraints. Early on, demand was strong, and in fact, you saw people buy further out, particularly Asian refiners that typically might buy a couple months in advance, covered themselves further. And so you actually had demand pulled forward at the same time as supply was shut off. And so that's where you saw differentials get very wide. But subsequently, you've got supply from SPRs, you've had supply from ships on the water that were sanctioned and were then allowed to unload. You've seen commercial inventories drawn down. You're seeing turnarounds and maintenance activities deferred in facilities that allow supply to keep flowing. Some movements now through the Strait. So there's been a supply response, as you would expect. And there's been a demand response. China had been buying a lot of oil for their SPR. That has come down. You've seen certain measures, primarily in Asian economies, to reduce energy intensity of their activities. You've seen some substitution into coal and other things that have taken some pressure off of markets. And so both supply and demand have responded. And I think the market has bought time. Now, the reality is inventories are a lot lower today. Other than in China, where there still are very healthy inventories. But whether you look at products or you look at crude oil, we've moved from comfortable inventories under normal times to what would be, soon to be uncomfortable. And I think that's the real question: is how much longer can these measures kind of ameliorate the risk? And at some point, they may not be able to.
How much longer does Chevron think? Is it a July, August story? Or?
It's probably in that time frame. And that's a little later than I would have said if you asked me 4 or 6 weeks ago. And so particularly the reduced buying out of China is something that we didn't anticipate at the degree that we've seen now. And so I think that, along with now the fact that we are seeing some of these flows out through the Strait, probably have pushed that timeline out a little bit more. So I heard your earlier comment about the president's remarks about Labor Day, or kind of towards the end of the summer. The market may be able to kind of hold things together out into that time frame, but not forever.
How confident could an executive be that we are close to an agreement if the president has said it dozens of times since the conflict began at the end of February?
Yeah, I mean, I think the evidence would say you shouldn't fully believe that until you see the agreement signed and you see the actions begin to come into effect. Iran has a long history of being a kind of a patient and immovable negotiating force, and so this has been hard to call. And markets are hard to predict, wars are hard to predict. I think negotiations with adversaries like that or counterparties like that are also hard to predict. And so, and the market seems to be somewhat discounting these things. I mean, you mentioned yesterday, I think you used the term whiplash. The Carg Island statement didn't seem to send the market up the way it might have a month ago, and the we're close to a deal didn't seem to send the market down. I mean, it softened maybe a little bit, but I think the reactions to these things are less and less the more it gets repeated.
You had mentioned to me, John and Lisa, a few weeks ago when you joined the show, that there are more clashes happening that not being reported. Are you still seeing that?
Yeah, I mean, there was, the U.S. hit a couple of ships just yesterday. That was not in the media initially. It's now out there. There were actually 3 fatalities on one of the vessels. And so there has been activity in both directions, and it usually gets out eventually. We tend to have sources that we see things pretty quickly, but yeah, there's been during the ceasefire where the president said we're shooting at each other less, or I forget the exact term that he used, but it's not a true ceasefire the way I think most people would think of a ceasefire. It's just less shooting.
Right.
Not zero.
I did ask someone about this though, and they said it is pretty good in terms of a ceasefire for the region, for the neighborhood. I guess, do you expect then, if the Strait of Hormuz was to open, that the U.S. Navy would stay there for a longer period of time?
Yeah, I can't speak on behalf of what their strategy would be. I think that's obviously based on the context of how they assess the risk, how they believe the Iranians are behaving in a manner that's consistent with whatever the agreement would call for. And the administration has used our forces around the world. We've seen it in a number of different places to enforce sanctions, to interdict ships at sea that are alleged to be in violation of sanctions. And so, I wouldn't be surprised to see a military presence there for some time.
J.P. Morgan said that 5 million barrels a day is coming out. The secretary says 7. You think maybe it's more like 3. When do we get back to 20?
I think it's going to take time. You've got ships that are out of position. You've got production that's shut in. You've got, normally we've got a very efficient global energy system. It's massive, but it's also highly efficient. It has been put into a state of a different kind of an equilibrium right now. And for that to truly return, you've got to get inventories rebuilt in the Gulf and around the world. You've got to get production reestablished. You've got to get ships repositioned. And that is weeks and months, not days. What are going to be the lingering effects of this crisis on the industry? Yeah, I think, an event like this typically creates some longer lasting effects. And I think it's a little early to know exactly what those will be. But typically, you see a lot of people concerned about energy security, resilience for their economy. You already see infrastructure projects underway in the UAE. I think you're likely to see other projects like that to build infrastructure to create optionality for logistics. I think you're likely to see countries establish reserves where they might not have before, and maybe higher levels of reserves for countries that have had them. Will it diversify sources? I think this is a place where the U.S. and the Americas are very well set up with strong energy resources, a lot of access to blue water ports, and not the dependence on choke points that you see in some other parts of the world. I do think some of the things Secretary Wright talked about in terms of And it's the U.S., but it's Canada, it's Latin America. We're blessed with an abundance of resources in this hemisphere. And I do think you'll see this country and this hemisphere become a more important part of the global energy system.
Do you see that right now happening with LNG, given how much Qatar has been taken offline?
Certainly the U.S. is in the midst of, it's already the biggest LNG producer in the world, and there are any number of projects that are advancing here along the Gulf Coast. If we can deliver those projects, deliver the supply, avoid some of the things that, again, Secretary Wright mentioned, that an export ban would send a bad signal, because if we want to be a reliable supplier, you don't want to put that question in people's minds. So I think we're blessed with a lot of gas in this country that will underpin not only our economy, but the global economy for decades and decades to come.
Given the things you mentioned, other countries looking at pipelines, finding ways to mitigate being reliant on the Middle East, do you think in the future we could see the Strait of Hormuz being something that's nice to have, not need to have for the global energy landscape?
There's a lot of assumptions you would make to get there. I mean, the Middle East is, the Strait of Hormuz, you can think of it as the central artery in the global energy system right now, and it's been cut off. So almost from a health standpoint, it's like having a heart attack. So finding a way to be healthier, have a system that's not as reliant on that, I think is important. I think you'll see steps taken to achieve that. I still think you'll see ships flowing through there. It'll be an economic way. The routes are, getting oil on ships and to destinations is a very efficient way to do that. And so, but I think you'll see optionality and alternatives that emerge in the system, so there's not as much single point, risk concentrated in the strait.
Has Chevron thought about rethinking the presence that you have in the Middle East because of this?
We have less exposure than some of our large peers. We produce oil in an area called the Partition Zone that is shared by Kuwait and Saudi Arabia, petrochemicals in Saudi and Qatar, natural gas in Israel. But it's 5% of our production. Others in our industry are 20% exposed. So we actually are looking at some opportunities to go into the Middle East. The risks are very clear, and there's some risks that I think people would view differently today. But the terms are also better than they've historically been. The Middle East has been a tough place to get a good return on your investment. And countries there have been willing to engage in negotiations that offer what we view as a fairer balance of returns for investors. And so we've made some deals there over the last year or two and are in discussions with others. And so we may actually, over time, have a little more Middle East exposure in our portfolio.
Interesting. You're also expanding potentially when it comes to power and data centers in the United States. This is an audience question about Chevron has been talking about powering data centers. Why are you venturing out of your core business? But I guess for the future, it potentially could be a core business. How much are you working with the technology space as we see this build out of AI data centers?
Yeah, so we've been explicit that we were not going to go in the power business as a merchant generator of power, to sell power into the grid or to get into power distribution. There are good companies that do that, some of them in this room. And it's a different set of technical, commercial, operating, regulatory issues that you deal with in that business. That said, we generate 5 gigawatts of power every day for our own use around the world in places where we don't have access to a grid and where we have to have highly reliable, large-scale power available to run LNG facilities, large, complex upstream operations. So we've got a lot of experience doing that. As the demand in the U.S. became very, very clear, and as we have relationships with a number of the different hyperscalers, it became evident that a model that would look a lot like what we do today, which is isolated from the grid power generation, high reliability, large scale, is what data centers are actually looking for. It allows you to avoid the issues of raising electricity rates for ratepayers because you're not going through the grid. And we've done that. And so particularly here in Texas, where we're advancing our first project, there's enough gas to supply large-scale power generation for multiple data centers for a long time to come. It's a business opportunity we'll look at. And it's a bit analogous, actually, Annmarie, to LNG. You've got, in West Texas, we've got stranded gas. The price is negative sometimes because there's not enough capacity to get it to market. There's a lot of gas there that hasn't even, we've only been drilling primarily for oil, and the gas comes along for the ride. There's a lot of gas that you can drill that doesn't have much oil with it, too. So large gas resource, if you can create demand for it closer to the resource and create a different business model, kind of like what LNG was a few decades back, that may be a business that we should be in. So we're going to explore it. We're going to see. We're encouraged by some of the early discussions right now. It'll have to compete for capital with the other uses of capital in our company and deliver strong returns. But we think we've got some projects that can do that.
So in the final few minutes, I just want to talk about the politics of your job now. You've almost become, I think, like the chief business diplomat in Trump 2, because many issues. Well, the first really being Venezuela. I mean, there's no way the U.S. government could deal with Venezuela without having Chevron almost on its side. It's the only U.S. company that's operating there. On top of that, tons of stories come out about how the White House is always calling the industry. There's one yesterday about how to think about oil and gas prices. I asked you a few weeks ago if you spend more time in Washington than the Permian. You said you spend more time in Washington. So what advice are you giving this White House right now in this critical moment?
Well, you heard Secretary Wright, who, by the way, is the best Secretary of Energy we've had in this country, at least in the time that I've been dealing with the department. And so the administration reaches out and asks for input. They may not always agree. They might not always, they've got other considerations that they have to take into account. But unlike the prior administration, who really didn't have much dialogue with our industry, this administration does. It's not just Secretary Wright, it's Secretary Berg, it's Secretary Bessent, it's Secretary Rubio. Across the board, we've got a very good relationship with open channels of communication, and they understand the role that American companies play not only in the economy here in the U.S., but around the world, and they want to be sure that they're getting good input as they formulate their policy actions. So I provide advice that represents what we see around the world in our business and how we think they could factor that into their policy decisions ultimately, which are their call. And so I don't want to get too deep into specifics, but we give them a factual based set of inputs. We try to be as candid about, here's the opportunities, here's the risks, pros and cons on these issues, and hope that they can then make decisions with better information.
It's clear the president is definitely very sensitive to energy prices. Every time you ask him about this, he says the oil prices will drop like a rock the second there's a deal. Do you think that is why they're pushing so hard for a deal? Are they concerned about $5 a gallon gasoline?
Well, gasoline prices in this country are politically sensitive. I think we have not reached a point where it's as urgent as it could have become had prices gone higher, or as urgent.
Do you think this summer we could reach that?
We could. As I said, the markets have responded to buy time and mitigate risk here a little bit longer than a lot of people thought that they would. I don't think that can go forever, as we see the way inventories are being drawn down and with the risks that still exist in the Middle East. I think there is a motivator there to resume more normal energy flows out of that part of the world, and so that's clearly part of the consideration. The nuclear capabilities of Iran are a big part of the consideration as well, and so we'll continue to work with the administration to try to support a good resolution of this and stabilize energy markets.
Other parts of Washington are calling for a windfall tax. Are you expecting that from this Congress?
Not much seems to get done through Congress these days.
So you're not worried?
Well, look, we've seen it in the past. It's an action that has been taken under other administrations. It's the wrong action. When you want more supply, typically taxes create less supply of something. And so creating taxes that discourage investment, that might push investment elsewhere, I don't think would serve our economy well. I don't think they'd serve our consumers well. If you go back and study what actually happened when we did this in the 70s and the 80s, the revenue that was generated was a fraction of what had been advertised. The investment in production went down, and there's a very clear case study. You can look at the UK, which is doing it right now to this industry, and they're seeing the very same thing. And so I think there's good evidence out there that this is not a policy that achieves the desired outcomes. You can't always predict what politicians are going to do.
Are you seeing a shift in Democratic politics, though? I mean, there's Gavin Newsom, who consistently goes after Chevron specifically, even telling constituents not to show up at your gas stations. At the same time, the Democratic candidate now for governor is an individual who is quite pragmatic in terms of what he wants to see in the oil industry in California, even talking about having drilling once again. And I believe Chevron donated to him. Do you see a shift in Democratic politics on how they speak about oil and gas?
Well, I think they're speaking about energy more broadly, differently. They're talking about affordability. They're talking about energy reliability. Those used to be the messages that we would encourage, but didn't hear much because we heard a lot about climate and the environment. And I think everybody has been reminded in the United States, but around the world, that affordable and reliable energy is essential for the functioning of the economy. And we all want to mitigate impacts on the environment as well. But if you don't have affordable and reliable energy, you have a real problem. People vote with the lights on. And if they're hungry, if they're feeling constrained economically, and they're concerned about energy supplies, they're not happy. And so I think it's important that people from both sides of the aisle recognize that affordable, reliable energy are fundamental to our economy and to all the people in the country. And we need policies that encourage investment in all types of energy to continue to provide affordable, reliable energy to the world.
Mike Wirth, thank you so much for your time today, the CEO of Chevron.
Thanks, Annmarie.
Thanks so much.
Go Nets.